Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors, and welcome back to the show. I'm your host, Dr. Alan Lomax. It's great to be with you today as we explore other issues with multifamily investing with our expert today, Rama Chunchu. He is the founder of USHA Investment Group. Rama is an active and passive investor in multifamily apartment syndications. He is an equity partner in 750 multifamily assets and a general partner in 64 units. With more than 15 years of experience as an IT professional, Rama brings experience in analyzing markets, underwriting deals, raising capital, and asset management. So Rama, we are pleased to have you with us today. So please share a memorable experience that helped you to be the person you are today.
Yeah, thank you very much, Alan. Thank you for this opportunity. I'm grateful for that, and good morning. And so there are many things that help me to be where I am today. But if I pinpoint one thing, so starting podcast has definitely helped me to connect with a lot of people in multifamily space. I will share that as my memorable event.
Well, that is what has helped me connect with a whole lot of people as well. It was a very frightening endeavor to get into, I can tell you. It was, and there was really quite a learning curve. But we've been doing it now. You're actually the 299th interview we've had under Real Estate Investing Abundance. And before that, we actually started off with another show in which we did about 150 programs. So I've got something like 450 interviews under my belt here. So we're really pleased to have you with us, Rama. So you started off in single family like a lot of individuals do. So tell us about how you got started in single family and why you made the decision to transition from single family to multifamily investing.
Yeah, sure. So definitely. So I started single families around 2014 and 15 time. I invested in North Carolina markets, mainly, Wilson and Raleigh and Cary markets. So mainly, mainly I invested in some, good location and also, few deals in bad locations, So there are some challenges, investing in bad location, like from operating point of view, finding right tenants and, and also, from, appreciation point of view, if you invest in good location, property will appreciate fast. And if you appreciate in, bad locations, it may not appreciate much. And sometimes, and also you have to put same kind of effort, even more effort, managing or operating property in bad locations. So and other challenges were like, I was working full-time in IT side, and also I was acquiring multiple properties in different locations. It's very challenging to operate, when you're working full-time and also managing these properties, all this stuff. So that is the main reason I switched towards, multifamily space. And also there are a lot of other benefits, going towards, multifamily, like, scalability and managing or operating, multiple, units in single location versus multiple properties in scattered different locations. And also, and also a funding point of view, right? So with single families, there is some kind of limit, if you acquire 10 units, after that, it's challenging to get more, loans. So whereas in multifamily space, you can go for non-recourse loans and there's no restrictions from, that point of view. And also you can scale fast, scalability point of view. So there are lot of advantage, going with multifamily. So that is the reason I switched towards multifamily.
Well, it's not at all unusual, of course, for real estate investors to begin in single family because, well, I mean, most of us have at least purchased our own home, so we're at least familiar with the purchasing process of single families. And it just seems more doable. But as many of us have discovered, it is actually much more challenging and much more time consuming in so many different ways to remain with a single family. There are certainly individuals who have overcome those barriers. But as you mentioned, after you get 10 single family homes through regular financing options, those financing options are often cut off at a cap of 10. And so it becomes very challenging in the financing market. And then, as you mentioned, it becomes very difficult to maintain and manage properly properties that are scattered all over different neighborhoods and different kinds of tenant bases, and it just becomes a major headache. So in actuality, it really is, in many respects, it's much easier managing a multifamily portfolio rather than a single family portfolio. But that takes not only understanding that, but it also takes a mindset. So tell us about you and the process you have gone through as an individual to find and overcome your limiting beliefs that allowed you to actually go from single family to multifamily.
Yes. So when I thought of thinking about multifamily, I started reading a lot of books around multifamily space and also doing a lot of research and following a lot of stuff in bigger pockets. Started listening, podcasts and also attending conferences and, reaching out these operators and, for both, for passive investing side also, for partnership, point of view, That's how I started into multifamily space. So, and also I was, I started building relationship with the brokers, and also started underwriting a lot of deals and, and also multifamily is a team game and you cannot do it alone. So you have to partner with, experienced partners and other operators in this space. So whenever in initial stages, there are a lot of mindset related issues like, how can I raise capital for this deal? And how can I, purchase these bigger properties? And, how can I manage these properties, without expertise? I don't have track record in multifamily space. It's a business. So I don't have track record of business. So how can I, overcome this? So then, through mastermind groups and through other, mentorship programs, helping me to overcome those limiting beliefs, instead of thinking about how you need to ask right question like who can help me to, raise capital, who can, help me in managing these properties, who can be, loan guarantee or those kind of stuff. So instead of asking how, if you have to ask like who can help you, So that's how I, I overcome my limiting beliefs from, in multifamily space during initial stages.
So just to give us kind of an idea here, from the time that you decided that you were going to embark upon multifamily investing and you began those educational and outreach and networking aspects, how long was it in terms of just a time period, a time frame? How was it? What was the time period from when you began that until you purchased your first multifamily property?
So at least a couple of years, I can say. So I was also working full time in IT side, and also I started with investing passively, couple of deals. Then and also I was actively underwriting a lot of deals and touring properties and building that relationship with brokers. So at least it took a couple of years, I can say.
Well, yeah, I just asked that because a lot of people like things to happen instantaneously, but I've really never spoken to anybody who one day decides they're going to invest in multifamily and then the next day they go out and purchase multifamily properties. It's a pretty unusual thing. It takes time, and it takes education, it takes preparation. And of course, all of that contributes to actually us helping to develop a mindset where we can realize that it's something we can do. But it isn't just a mindset. I mean, we can think positively, and we can focus our minds. But as you mentioned, through that 2-year period, you weren't just educating, you were also building a network. And multifamily is not something anyone is going to go out there and do on their own. I mean, even if they are trust babies and they have millions of dollars, they would actually be very foolish to go out there and go into multifamily without first studying it and also developing a network to support them in those endeavors.
Yeah, totally.
And so, Rama, tell us about those experiences of how it is. I mean, you did more than just study. You really did. I mean, you can go to all the networking events you want to and all the meetups you want to, but unless you're actually using those opportunities to develop the network and to develop the team, they're going to just be a waste of your time. So how did you go about that process of gathering partners together and building your first team to make that first investment?
Yeah, great question. So I started attending these, meetups and virtual conferences, also listening a lot of podcasts or reading books, So during that, attending, mostly initially I attended virtual conferences and also live meetups, but so you will get opportunity to network with other operators in this space, either Zoom, Zoom chat or something, some other way you will get opportunity to interact with these operators, and understanding what are their strengths, what exactly they are looking, in terms of investing point of view, what is your unique ability or what is your strong points, and looking for someone who can leverage your the missing points from your expertise, and also networking with those kind of people, and and helping them, and and asking right questions, and also will help speed up the process. And also I started my own podcast also, and also that also helped me to reach out more number of experienced operators in this space, and so virtual conferences and also my own podcast helped me to finding partners. I can say definitely helped me in finding my partners, like yeah.
Well, you just mentioned that asking the right questions is a key part of developing those partnerships. Can you give us an idea here as to really what are the key questions that we should be asking when we are beginning this process of networking?
So main thing is like what are your challenges? What challenges you're facing, in investing space, multifamily space, and what kind of help you need, in terms of raising capital, or sourcing, finding deals, or sometimes some out of state operators, they need someone in boots on the ground. So those kind of stuff.
Okay. Well, being a professional in IT, you have a sense of analytics, and so I'm assuming one of your strong points has been that aspect of underwriting multifamily deals. Take us into underwriting. What is it, and how is it that you were able to leverage underwriting in the process of helping you to develop partnerships?
Yes. So yeah, my because of my engineering background and IT background, so I'm strong at analytical skills and math side. So that helped me in, underwriting a lot of deals, mainly like whenever we get, T12 and rent roll from the brokers. So we need to, assess like what is the value of that property, how much broker is asking, uh, how much we can offer, So that underwriting skill will help, within like few hours or within few days we can gauge the value of the property. So mainly once we get the T12 and rent roll, so we have like a standard underwriting model. We plug in all the numbers like income and expenses and from T12 or T3, and also current rents, and how much we can increase the rents, maybe sometimes organically, sometimes forced appreciation, like by renovating units, how much we can increase the rents, and what kinds of debt, like agency debt or bridge debt, how much LTV, and what kind of interest rates, and what would be the insurance premiums, and what would be the taxes for next 5 years, or next 3 to 5 years, and also different aspects like uh, re- uh, renovation budget, or other marketing budget, or admin kind of expense, all those kind of stuff will plug into underwriting. And also rent projections for next 3 years or 5 years, each year how much, 2%, 3%, 4%, and how much expenses escalations, those kind of stuff will plug in, and we'll get the values, mainly. So from investors point of view, always look for at least 6 to 8% cash on cash, and IRR point of view at least 15%, and AAR point of view at least 18%. If that deal meets those criteria, then we'll go and submit LOI. So if it didn't meet, we'll try to negotiate the price, and we'll submit it with low ball LOI. So that is a process we will follow.
Well, just to give us an idea here, the multifamily markets have been really tight for since 2017, really going 18 and 19, they got very, very tight. We expected a break with COVID, and that really didn't happen. Actually, cap rates continued to suppress, and prices continued to increase. 2022 has been a year of disruption in markets nationwide. What have you seen in terms of the markets in multifamily?
Yeah, great points. So yeah, I totally agree on the points you mentioned. So we thought cap rates may go up because of COVID, and it will impact negatively multifamily space, but it went other side. So cap rates was compressed, and prices went up like 20-30% in last 1 year, 2 years. But things have changed now, like from March and first or second quarter of 2022, because of high interest rates, and and also high interest rates, low debt, low LTV now. Definitely, and also it impacting deal flow. So now number of deals coming to market is slow down, and that impacted the main factor is like interest rates. So that is impacting overall returns to investors. So, and also we can expect interest rate will go up next couple of quarters. And after that, it may stay stable, and it may go down very slowly. It may come down slowly, not maybe 25 BPS, something like that. But we are actively looking for deals, and we are underwriting deals. And if any of deal meets my investor criteria, we'll submit LOIs. Otherwise, we are actively looking for deals, and and also submitting LOIs.
Well, Rama, tell us what you have to offer investors and how it is that they can get in touch with you.
Yes, so investors can reach out me through info@USHAcapital.com or USHA Capital, USHAcapital.com/podcast, And also I'm organizing virtual conference in multifamily space. It's called Multifamily AP 360.com. So for your listeners, I will give you an additional discount, 15% discount if they use code AP15, active passive 15. That's how they can reach out me.
Okay, great. And we will also have that information in our show notes. And just one last question here, Rama, and that is you talked here about the underwriting process. Talk to us about the after purchase processes and the asset management of multifamily and how you are managing that.
Sure. So after purchase, like for the deal we purchase, we are going with internal management. So not going with third party management, since like it's a small deal, like 64 units, and going going with third party is challenging, and hiring full-time PM or hiring full-time maintenance guy is challenging. So for this size of deals, so we are going with internal property management. So we hired full-time maintenance guy and also part-time leasing agent. And also like so with this property there are a lot of delinquency issues, because like previous owner was out of state and it's not managed properly. So we are handling that stuff. We evicted a lot of bad tenants from that property, and we are stabilizing the property, I can say. And also without doing much of interior renovations, we are able to achieve projected rents, like the projected rents within 1 year. Like we projected those rents end of second year, but we are achieving end of first year itself. And also we did some exterior stuff like parking spaces, those kind of stuff. Yeah. And
Okay.
we were able to we are stabilizing the property at this point, I can say.
Okay. Well, very good. Well, Rama, it has been a pleasure having you today. Thank you for being with us, and thank you for sharing your expertise.
Thank you very much, and thank you. I really appreciate for this opportunity. I'm grateful for that.
Enlightened investors, just one more thing before you go. You know the drill. Like, share, and subscribe. But also, we need your help to build our audience. So please go to your favorite podcast app and give us a rating and a review. We'll be greatly appreciative. Until next time, prosper and live abundantly.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steed Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steed Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at steedtalker.com.